Welcome everyone to Doing Business with China, the opportunities and challenges of RMB internationalization. My name is Lisa Leander and I'm the Member Services Officer with GBSN. I'm the main contact for business schools and our partners. Before we begin, I'm briefly going to review the Global Business School Network for those of you who have not heard of us before. We are a nonprofit organization located in Washington, D.C. We are a network of leading business schools working to improve management and business education in emerging markets. And we do this through two main ways, both through international development programs, through our networking of business schools, and also through events, through our annual conference, and such as webinars such as these. We have 50 member schools. These are leading schools around the world, all with an interest in strengthening management education in developing countries. We do accept new schools on a quarterly basis. If you have interest, I'd be very happy to speak with you after the webinar. We have an online application process. Today I'm very pleased to have with us a member school, Columbia Business School, Ron Schramm, as well as Russell Flannery, from the Senior Editor and Shanghai Bureau Chief of Forbes magazines. Thank you, Russell, for joining us today.
Well, thank you for inviting us to be here, Lisa and Ron. 30 years ago when I was studying China's economic reforms and agricultural reforms, China was really a niche topic for the relatively small number of people that were interested in it. Today, China is playing an increasingly influential role in the world. I think the performance of the economy and the decisions that are being made by businesses here are really having an impact on counterparts all over the globe, including companies like Yahoo and Boeing and GM and Yuan. What's ahead for China's currency today? How will the increasing use of the RMB overseas in the coming years affect investors and businesses around the world? These are some of the topics that we're going to be hearing from Ron about this evening. Before we get started, just to let us get a chance to understand everyone's background a little bit, I would like to ask everyone to have a look at the poll that you can see on your screen now and tell us a little bit about how much you know about internationalization of the RMB. While you're filling that out, I'm going to continue and just tell you a little bit about Ron. Ron is actually one of the most distinguished experts in the U.S., I would say, on this topic of RMB internationalization. Ron's been a professor, of course, at the Columbia Business School, but he also has a very long history on the ground here in China. He was a Fulbright scholar at the University of International Business and Economics in Beijing, where he taught the first course ever in corporate valuation back in 2003. He's been a visiting scholar at some of China's most distinguished schools, including Jiao Tong University here in Shanghai, and he was also most recently a visiting professor at Forbes, which many of you know to be one of China's most successful and impressive business graduate schools. So if we take a look at the poll results, we can see that about 47% of you have some knowledge about the internationalization of the RMB, and 13% have quite a bit, but having said that, about 40% don't know too much. So that will help Ron and help us in crafting the questions that we follow up with later. So without any further ado, Ron?
Yes, thank you very much, Russell, for that kind introduction. As you know, Russell is Chief Correspondent and the Chief Editor in China for Forbes, and thank you, Global Business School Network. It's nice to have all of you here, and first of all, let me wish you all a Happy New Year, a Chinese New Year, or as we say, 新年快乐. We're going to cover several topics today on the internationalization of the RMB. And the first topic is the history of the RMB. And after that, we'll move on to questions about data and recent developments with regard to the internationalization. And then the interesting questions, which I think we'll move quickly to, are the opportunities and challenges related to the internationalization of the RMB. And then we'll wrap up the discussion with some main themes, and then you'll have an opportunity to have Russell voice your questions. So it should be a fact-filled and interesting talk. I'll try and ask you questions as we go along just to make sure that you're with me. So first of all, let's look at the history of the RMB. As we can see, one point to note is that China has really had a long history of depreciation of the currency beginning in the 80s. And so the mentality of an appreciating currency is perhaps a sea change and maybe a difficult type of sea change to undertake, but China has done that with something like a 30% appreciation since it began in around 2005 of strengthening its currency. Before 1978, the notion of an exchange rate was rather meaningless in the sense that China was closed to the world. In fact, I was just at a very fine talk by Ezra Vogel at the Harvard Club in which he talked about Deng Xiaoping's opening up of China. He has a new book on that. But anyhow, prior to 78, there was no trade, no capital flows, and so an exchange rate for something that's not traded is sort of meaningless. And there was substantial segregation of all sorts of markets, whether it be housing, equity markets, and of course the exchange system. And by segregation, I mean that international participants were sort of treated differently, had different pricing than local domestic participants. Then a major step was in December of 1996 when China accepted Article 8 of the IMF Charter, which basically said that it would provide foreign currency for any current account, that is trade-related transaction. Notice, though, that that acceptance does not include capital account convertibility, and capital account convertibility is still quite limited today, till today. And what capital account convertibility means is that one is unable to simply move funds across borders for financial purposes. And so we had different types of foreign exchange accounts, surrender requirements, and access to foreign exchange for capital account transactions extremely limited, but for trade transactions in principle since 1996, freely available. That's a part of an IMF agreement. Reform of the system of opening up movements of currency have been well thought out in China and very well staged. So initially we see foreign direct investment welcomed in the initial stages of reform. Then we see current account convertibility, as I just mentioned, so access to foreign exchange for trade transactions. Then we see opening up to one type of capital account transaction, large financially well-heeled institutions called QFIIs, qualified foreign institutional investors, were allowed to move funds into and out of China. And then development allowing some large, well-heeled investment type firms and institutions in China to move funds outside QDII. So we see a process then of reform and opening up, but a very well thought out process, and the internationalization of the RMB is within that context and moving us forward. And then we can talk about some of the restrictions on foreign exchange and some debate as to how much an individual citizen can actually move out of the country today, but somewhere between 2,000 and 20,000, although I have heard up to 50,000 per person can be moved out. There's no clear regulatory guidelines for this, but now it's possible for individuals to move funds out of the country depending upon purpose, and specifically for educational purposes, it's easy for funds to move out. So further steps towards internationalization. In my early days in China, in the early 1990s, of course, there was this foreign exchange certificate, a totally different type of currency which only foreigners had access to. And that sort of highlights of how far we've come, this notion of segregation where foreigners would even be using a different currency which could only be used for specific purposes. China had multiple exchange rates which all converged in the mid-1990s to a single exchange rate. We had official exchange rates, more market-based exchange rates. All of this is detailed for those interested in an article that I wrote with now Dean at the UIDE in Beijing, and that article is cited here. So that gives a nice history of China's foreign exchange system for those who are interested. It's a good way of seeing the trajectory of China's foreign exchange reform. There are just some key words that I've mentioned here: surrender requirements. There were periods and continue to be periods where those earning foreign exchange in China were required to surrender to the central bank. And of course, all of these requirements have accumulated into the 3.3 or 3.3 plus trillion dollars of foreign exchange reserves that China has managed to accumulate. And then some recent developments. In July of 2005, we saw a revaluation of the currency and the beginning of a more flexible crawling appreciation of the currency. Then in July 2008, with the financial crisis, returned to a fixed exchange rate, and then that maintained for 23 months, and then beginning around June 19th of 2010, we saw a continuation of the crawling appreciation, and it has been actually more than a 5% appreciation since that point. So we've seen an appreciation, a continued appreciation of the currency. We'll talk a little bit about that now later. Now, some of the key players we have within China's foreign currency market, that 3.3 trillion plus in reserves. There are many actors who want to somehow involve themselves in how that's managed and used naturally. So we have the State Council, which sets out the broad policies, the SAFE, the State Administration for Foreign Exchange Control, Regulations and Implementation, the Bank of China, one of the big four banks, which deals then with actual operations of buying and selling foreign exchange, and then the longer-term investment strategy dealt with by the Sovereign Wealth Fund, CIC, China Investment Corporation. So we have different actors involved in managing China's foreign exchange reserves. Now, some data. Thinking about where China stands in terms of trade, we see that as an exporter, it's in world exports, it's the world's largest exporter in percentage terms and absolute terms. It represents 9.6% of all exports. And in imports, it's the second largest importer. And similarly, in the United States, we have the U.S. representing a major trade share in exports, but takes the lead, of course, in terms of imports. And here we're talking about trade volumes of trillions of dollars if we added up exports and imports together. So China is a huge player in international trade, is the main point here. But then if we look at China's role in currency markets, and again, this just highlights the U.S. role, in trade. But if we look at China's role in currency markets, a survey by the Bank for International Settlements, their triennial survey of central banks and foreign exchange trading, shows that China's share of overall global trading, that is the RMB's role in overall global trading of trade, is less than 1%. So remarkably, we have the world's largest trader by some measures in terms of goods and services, representing just a tiny, barely a rounding error in terms of foreign exchange trading. And meanwhile, we have the U.S. dollar at 42% of global trading and the euro at 20%. So for those optimists, it shows you how far China can go in terms of its potential for moving the RMB into a currency which is tradable. And that's, of course, why we see all this interest in financial centers from New York to London to Hong Kong to Singapore, and, of course, Shanghai. Now, China has taken steps to increase its role in RMB trading. And by the end of 2011, $500 billion was settled in the RMB. So even since that Bank of International Settlement survey, there's been tremendous growth. And 10% of China's trade alone has now invoiced in RMB. Keep in mind, though, that these are trade transactions, current account transactions, and current account transactions represent only a small fraction, just a drop in the bucket of all trade in currencies. Most of trade in currencies are financial trades that interbank market of 200 or so banks trading with one another. So while China has made some significant progress on the current account and trading foreign exchange related to trade transactions, it has a long way to go on in terms of capital accounts. And that's a theme we talked about earlier. Now, if there are some questions about this, please put them forward. Now, the move to the greater internationalization of the RMB began in 2008, where exporters were allowed to price RMB, price their exports in RMB. So, as I said, a trade transaction. And deposits were allowed in RMB offshore, particularly in Hong Kong. So that has been the initial steps. And then we had institutions issuing bonds. And if you're wondering or have questions about what the terms of those bonds are, by all means, tap them in. You can question them in. But basically, McDonald's, Caterpillar Tractor, Hopewell have all had the opportunity to issue bonds and borrow in RMB. Now, of course, for these firms which have huge revenues in RMB, this is ideal. It offers an opportunity for hedging. And so, but that being said, these are really experimental moves, just a testing of the water on the part of the Chinese authorities in terms of the internationalization. And then we have deposit taking in Hong Kong, which is another form of internationalization where individuals are allowed to, had been allowed to convert up to a maximum of 20,000 RMB per day and deposit those within the banking system within Hong Kong. Further developments in the internationalization have been swap arrangements with 14 central banks, everyone from South Korea to Belarus, and those arrangements are valued at about RMB 1.3 trillion. Recently, Japan has agreed to hold RMB bonds as part of its foreign exchange reserves. That's a first among central banks. And hints of further opening up of capital mobility, that is financial flows between borders, as foreigners are allowed to invest overseas holdings of RMB. If outsiders can show that they've acquired those RMB through legal methods, then they are permitted to reinvest those within China. And just one announcement after another. This is from the People's Bank of China regarding new rules and regulations on RMB and its internationalization. For example, here it's a new sets of regulations allowing foreign direct investment into China using RMB, where heretofore it had been in euros or dollars. So these are all moves toward making the RMB a vehicle currency for many types of financial transactions. Now, let's then move from that sort of set of topics to the broader question of what makes your currency an international medium of exchange. Well, it's the same type of question we would ask about money. What makes money money within a country? And of course, the traditional answer is, well, it's a unit of account. Money can serve as a way of measuring whether one thing is more expensive than the other. Clearly, the RMB can fulfill that function. Stable enough so that we can have that type of predictability. A store of value is a question of, do we want to hold our wealth in this form of currency? And then a medium of exchange. Well, I think from what I've said so far, you can see that the medium of exchange is where China is starting. In other words, trade transactions are now permitted to be invoiced in RMB and paid in RMB. And where it wants to go next, it seems to me, is as a store of value, as an investment vehicle, or as a financing vehicle. And here we see, the initial steps in terms of allowing some capital mobility in the country with RMB investment. And we see the instances of bond issuance by firms like McDonald's or Hopewell. Now, the real question one wants to ask with regard to internationalization is no matter what you present to the world as an investment vehicle, including the RMB, investors will want to hold it. And in order for them to hold it, they will want to have assets in which they can place it, which yield a return and some suitable risk, with some suitable risk profile. And I think China has ways to go in terms of developing along that dimension of developing a pool of assets which investors can hold their wealth. Of course, the McDonald's bond is one thing, and Hopewell is enough, but this is just incipient, just to start. And in particular, it is still difficult to enter China with RMB and buy financial or real assets. And to the extent that that is difficult, that will be a limitation on how far the RMB can be internationalized or acceptable as a medium of exchange and a store of value. In the end, you want diversification and return. This is what China is attempting. Of course, some of you may be thinking, well, what about the return on the RMB itself as a currency? And if you have questions about that, then that's a good type of question, because, of course, that would make the RMB attractive if one expects it to appreciate in and of itself. But that, I believe, is not enough. You really want a broader set of assets in which you can hold the RMB rather than simply cash or a bank account in Hong Kong. And I think the banking system in Hong Kong is very creative in devising other ways of holding that wealth. In particular, also for the pricing of many of these assets, you'll need a yield curve, and that will be based on underlying treasury instruments. And again, China's treasury market still remains limited to the outside world to a large extent, and is not the active and deep treasury market that we find in the U.S. And given China's fiscal surpluses, one also wonders when that treasury market will, if it ever will, have a chance to evolve. And this, of course, you need an underlying treasury market, a risk-free set of assets to create a yield curve. And to the extent that that probably will grow more slowly in the future, may present challenges for the internationalization of the RMB. Now, we all know this policy trilemma that countries can only do two out of three things: control their money supply, have a fixed exchange rate, and international capital mobility. Out of those three things, which are generally deemed desirable, China can only, or any country can only actually have two out of these three. It's very difficult and usually problematic when countries try to have financial mobility, fixed exchange rate, and also, let's say, a rapid increase in their money supply. You know, this type of thing is, of course, central to some of the problems that are occurring within the Euro system. So a question for you all, and I think you know the answer, is, well, where is China heading in this context? It currently has, and it will never surrender control of its money supply, so we know it will always want that. And it has had a fixed exchange rate, but which is now more or less still a crawling peg, so we could call it a quasi-fixed exchange rate. But it has no international capital mobility, and the question is, well, where does it want to head? And so that's a question for you to think about. I'll tell you the answer now. Well, of course, China wants greater international capital mobility, but if it has that, it means it has to throw the fixed exchange rate fully out the window and move to a floating exchange rate. And so I think that is, as we talk about the internationalization of the RMB, we're talking about greater capital mobility, but then the logic of that is toward a floating exchange rate, because by the policy trilemma, there can be no other. Now, why does China want to have the RMB as a vehicle currency for transactions around the world? Why does it want to internationalize it? Well, there could be many reasons. Could it be seigniorage? That is, what is seigniorage? That is the right of the king to print money historically. And, you know, the United States benefits a fair amount from having other people around the world hold green pieces of paper which pay no interest or pay low interest. And does China want that benefit of having its own currency serve that purpose, and the gains from basically interest-free financing through the issuance of paper around the world? That's possible. Could it be a shift in the hedging costs to outsiders? If we think of the situation now, China basically bears the cost of hedging because it's holding lots of dollars, and much of trade is still invoiced in dollars. And so as a result, China takes the risk. Does it want to have outsiders bear that risk, where outsiders basically need to pay in RMB? So this is a risk-shifting method. Is it building on that? On the other hand, is it an opportunity to give trading partners and investment partners such as McDonald's a chance to hedge? As I said, McDonald's is long RMB. If it borrows in RMB, it's short, so that's an immediate hedge. Is this the reason for greater internationalization? Do they see a bottleneck for hedgers and their trading partners if the RMB is not internationalized? Possibly that's it. They want greater regional influence. Do they want their neighbors holding RMB, and do they feel that this would give them some greater political influence within the region? Possibly. Is it simply for prestige? Is this just a question about face and prestige? Well, I suppose that's possible too, but China heretofore has been a rather practical policymaker, so maybe we can discount that. Or alternatively, we can think of the internationalization of the RMB as a way of getting some of those onshore RMB, some of the money supply onshore, offshore. In other words, is it a way of reducing inflation at home? To me, this is an intriguing possibility. A recent Bank for International Settlements report suggested that the internationalization would create inflation. That is to say that it would invite foreign investors to bring RMB back into China and invest, and that would be inflationary. I actually have just the opposite view. I think that if Westerners, those outside of China, in Asia, are holding more RMB, that's less RMB within China. And that in turn will have a dampening impact on inflation. And so I think this is a real possibility and a real benefit from the internationalization. Is this an effort to reduce their holdings of US dollar-denominated assets by requiring others to pay them in RMB rather than US dollars? Has China reached a historical moment where it has said, we've spent our entire period of reform accumulating dollars and now we have too much? Let's go in reverse and start spreading those dollars around the world. Let's reduce our exposure to dollars and have payments made in RMB. I like it. Or finally, as they say in biology, whatever is inevitable becomes necessary. Is it just inevitable that the RMB will be internationalized given China's size, given the desire, the arbitrage opportunities, which I'll talk about briefly in a Second, is it just inevitable that the RMB will be internationalized, and therefore it becomes necessary that China manages that internationalization right now? This is, I think, the position that Robert Mundell at Columbia has proposed, that it's inevitable, and so China is just managing that process. Now, what are some of the bottlenecks in thinking about internationalization? Well, I think one bottleneck is that China to date really has wanted to have control of the exchange rate. It for periods had a fixed exchange rate, which is evidence of that, and it still manages where the exchange rate is moving on a daily basis. It's not a really floating exchange rate. As soon as you internationalize the RMB, truly, it means that there is an offshore active and large and deep market in the RMB, and that in itself will determine the exchange rate. The foreign currency market is incredibly a $4 trillion a day market. It's very difficult. $4 trillion a day. It's very difficult for any country to control that market. So once you let the genie out of the bottle, that is, internationalize the RMB, you will have a separate exchange rate for the RMB offshore, which will be independently determined. And I think that certainly is something China is thinking seriously about, the benefits and the cost of that floating rate, and that just comes back to what we've said earlier. The banking system, many countries have encountered their own financial crises with the exchange rate and its fluctuations at the center and the absence of hedging and risks undertaken by the banking system. So foreign currency has been at the center of many financial crises, and the question is China's banking system sound enough to support an active market and a free market in exchange rate? So all these are things that are not roadblocks, but will slow the process of internationalization. Issue of exporters and employment in China. If we have a floating exchange rate, which I suggest is implied by the internationalization, then the currency will likely appreciate, could appreciate, and that will have impacts on domestic employment. Is there a sufficient skill set and experience of currency hedgers and traders within China to deal with a currency which is floating in an international context where the currency is traded worldwide? That's a question I think China is still moving up that ladder of acquiring skills. Is China willing to have capital mobility that could move either dramatically in or out of the country? That is our hot money flow. This, of course, is something China recognizes as an issue and will sort of stage then the internationalization until it feels it's ready and has a firm foundation to deal with that type of situation. And finally, is creating holders of RMB offshore. You're creating a vested interest in seeing the RMB strengthen. And I'm sure policymakers in China are thinking that's just what we need, one more group outside of China saying we want to see the RMB appreciate. And in this case, it won't be foreign governments, but it will be holders of RMB. So by internationalizing, you're also creating sort of a separate group a different group who also would like to see the RMB strengthen. So these bottlenecks will slow the process of internationalization of the RMB. A key driver, China's savings rate, remarkably at 52% in 2010. This really drives much of China's foreign reserve accumulation. So we always have that in the background. How did China acquire all those dollars? It's all tied in basically to one of China's key drivers, its high savings rate. So we'll skip through a few of these. Here I'm just talking about, and I'll just quickly summarize this. This is basically stating that remarkably China is one of the few countries in the world that violates a key arbitrage condition in finance, which is covered interest rate parity, making the forward rate the spot rate. and interest rates onshore and offshore. And it basically these days is setting the forward rate to match the offshore rate, offshore forward rate. But that offshore forward rate corresponds to different interest rates offshore than our onshore, and that in turn means that there's a huge arbitrage opportunity if one can arbitrage between offshore and onshore forward rates. And so China is one of the few places where this opportunity exists, and of course it is able to exist temporarily because China has strict capital control still. But it becomes more and more of a challenge to manage for China, and I think this is part of the inevitability and the necessity of some internationalization. Here I just propose how I would arbitrage, but we won't go through all the gory details of arbitraging across borders. So in summary, I think as we wind up, because I'm probably a minute or two over time right now, I think what we want to say is internationalization of the RMB is part of a package, and that package can to some extent be painful. And the package is, if you internationalize the RMB, you're going to have exchange rates offshore that might very well diverge from onshore, and China would then have no control over its exchange rate. This would create a huge set of problems in terms of trying to arbitrage across two exchange rates. And people would be trading at different exchange rates and invoicing to take advantage of it. There are all sorts of clever ways people think of to arbitrage when you have that result. And the second is a part of the package is on capital mobility. And of course, China will try to manage capital mobility, but it's harder and harder to do. It becomes capital mobility, cross-border movements become inevitable and therefore become necessary. So I think that basically wraps up the main points that I want to say. Thank you very much for listening, and now I hope I can respond in some intelligent manner to your good questions.
Well, thank you for that insightful sweep of history of the PRC's currency policies, Ron, and also some forward-looking analysis. The questions that have come in so far are mostly asking for more forward-looking analysis. One question that let me give you straight up is, well, given all the constraints that you've mentioned on internationalization, how far do you see China actually internationalizing the RMB in the next 5 years?
Well, I think some of the steps, you know, of course, some steps have already been taken. So now we have limited access to investing. Foreign investors who hold RMB have some limited and restricted ability to enter markets in China. So I think that within the next 5 years, it's very possible that what we will see is an exchange. 5 years from now, I wouldn't be surprised to see a floating exchange rate, but still the presence of capital control. So sort of a mixed picture. Some intervention with the exchange rate, so it won't be quite as fixed or as crawling as today. Some intervention, but significantly more flexibility in the exchange rate, more market determination, but still some heavy-duty capital controls in a very staged way as we've seen in the past.
There's a question also. You mentioned early on about the different exchange rates for the currency 20 years ago or so, Ron. To what extent is there a gray market today? And is there any spread over the official rate?
Yeah, well, there's an offshore market. I have not seen. There was a gray market, of course, 20 years ago, but I don't see a gray market in China today with a more appreciated exchange rate onshore. There is the non-deliverable forward market, which is an offshore market, and those rates, as I mentioned sort of toward the end of the presentation, in fact, do diverge and are not consistent with the onshore market. And that market is easily accessible through Hong Kong. So the sophisticated investor, I'm not talking about the Lao Bai Xing, the common man, but the sophisticated investor who wants to take advantage of those differences can through Hong Kong.
Another question, Shanghai aims to be an international financial center by 2020. While it might become even the largest financial center based on RMB transactions, could it become a true international financial center like New York or London without a fully internationalized currency?
No, I think that that also is part of a package. So, the first point I would make is that historically, every country's own currency is traded principally within its own country. So I'm quite sure that the RMB international transactions, when it finally does become fully an international vehicle currency, which I'm quite sure it will be eventually, that trading will take place somewhere in China and arguably in Shanghai or Hong Kong and Shanghai. Because that's just how things work. I mean, the Swiss franc, the principal trading center for the Swiss franc is Switzerland, and so on and so forth. And but to answer your question, no, until it develops things like a yield curve, a depth of a treasury market, which in turn then ties in with a currency that is truly convertible on capital account, that will, of course, that in conjunction with issues of rule of law, which Hong Kong so well excels at, Hong Kong will always then be, or Singapore, taking a lot of that Asia business away from Shanghai. But once those roadblocks are overcome, I can see Shanghai as of course a major financial center, but that's if and when.
When? When might that be?
I would guess, and of course this is my guess is good as I would say if you took a poll of the listeners, probably their answer would be more accurate than mine, the average, but my guess is, maybe in 15 years, 20 years, that's going to happen. I can't see all of that. China's done a lot over the past 20, 30 years, but I can't see all of those types of things happening within the next 15 years. And again, China doesn't run budget deficits, and so when you don't run budget deficits, you're not issuing the same depth of treasury bill instruments. That will slow the process.
Of course, as everybody here is following China and no doubt knows, there's some concern here about the broader direction of economic reform in the country, favoritism toward SOEs and other things. Against that backdrop, the next question is, the RMB is often described as being pregnant, i.e. that internationalization can only go forward. Is it technically possible in economic terms for Beijing to halt the process, and what would be the ramifications?
Yeah, so this is sort of the question of inevitability and necessity, that it's inevitable, so therefore it's necessary. And I think it's an interesting analogy, pregnant, where the joke is you're not half pregnant. You can't be. You're not sort of pregnant. You either are or you aren't. And to some extent with the RMB, in the end, it's either going to be convertible in international vehicle currency, or it isn't. And China has really to date tried to be half pregnant. So to manage, and they've done a good job of it, by the way, of managing that sort of financial system, but it's becoming ever more difficult because of these arbitrage opportunities I mentioned, offshore and onshore, and the presence of Hong Kong, where so much finance can move in and out of China. So the wall of restricted capital mobility is crumbling, and so there's this inevitability. And so I think what China is really trying to do is manage the destruction of the wall in sort of a constructive way. And time will tell. They've had great success in doing things like this in the past, and my bet would be on the Chinese government that they'll be successful in managing a transition, a pretty smooth transition toward internationalization. But it will take time. And the question is can they ward off these speculators and people who find covert ways of flowing money in and out of the country? Can they buy enough time in order to manage that?
Mm-hmm. China has been a hot topic in the election campaign so far in the States, and President Obama was just talking about the U.S. trade relationship with China last night. First off, could I ask, to what extent do you think that the RMB now is fairly valued against the U.S. dollar?
Well, it's getting there. In fact, The Economist had an article showing that if you, if you include the fact that there are, non-traded services and that a broader measure, we'll say, of competitiveness, that the RMB is fairly priced now. So that by one measure, but purely by a purchasing power parity measure, it's still a little bit underpriced. Yeah, what we have to realize is that the RMB has been appreciating, but also that China's inflation rate has been high, in the 5–6% range, and those factors together have tended to reduce the competitiveness of China and have revalued the currency in real terms substantially over time. So I'd say we're getting there. And in that context, my own guess is that we're going to see, for the RMB itself, a continued appreciation, but slower appreciation than we've seen in the past.
How slow?
So you'd like to see a number. Most people say in the 3 to 5% range, and so I would tend to be on the slower side, which is maybe the 3%, perhaps 3% range appreciation going forward. So diminishing rates of appreciation, continued appreciation, but diminishing rates of appreciation going forward because inflation has taken up some of the slack in China.
Mm-hmm, mm-hmm. To what extent do you think that appreciation of the currency would help with the big U.S. trade imbalance with China?
Yeah, well, of course it's going to help, but the big story between, in my view, the big story between our two countries is the savings rates. China, as I showed on the graph, their savings rate is something of the order of 52% of GDP. The United States is something of the order of, today in this sort of post-crisis era, something like 13% of GDP. This is a huge difference in savings rates, and that macro fundamental drives, that huge difference in a macro fundamental drives a lot of the trading imbalance. So there may be, the point being, the appreciation is likely to shift some of our trade to some of the more competitive countries, so there'll be, that's already happening. but in terms of its impact on our own imbalances, is unlikely to have much of an impact until the U.S. savings rate changes, and on China's side is unlikely to have much of an impact until their consumption levels go up and their savings rates are reduced. I'm actually writing something about this now. It's an interesting topic because in both countries, savings is principally, most of savings is actually not done by thrifty individuals, but is done by corporations. And so if one wants to see some movement on savings rates, one has to think a little more deeply about how does one channel those savings of corporations in consumption. And yeah, it's a very interesting question.
Mm-hmm. When we think about everything that's happening in China, are there other countries or internationalization events in the past that China is learning from in its own process in order to avoid mistakes?
Well, I'm sure it's trying to find examples. I think I'd have to think about that question because, you know, we think of what the international currencies are. We think of the euro. We think of the U.S. dollar. We think of the Swiss franc. And it seems to me in all of those cases, the internationalization became evolved naturally. It did evolve naturally. There was a period of opening up of international capital controls around the world. In the interwar period, of course, there wasn't much capital movement, and then after World War II, we saw a lot of capital movement across borders. In particular, I think we saw in the U.S. Also foreign direct investment as a major type of capital flow, and I think China has also followed that pattern of allowing foreign direct investment as an initial step. I think what China's, I mean, maybe the best way to answer the question is yes, China's trying to avoid some of the mistakes that we see in Latin America, where we saw such dollarization of the economy. As you know, in China, it's illegal actually to have contracts undertaken in dollar-denominated or any other currency. They all have to be denominated in RMB. And I think that was an early effort, and a smart effort to avoid the problems of dollarization and banking risk that occurred with dollarization of those economies, where those countries became heavily exposed to the dollar in terms of liabilities. China, however, I think what they haven't learned was that the other way, they always were very worried about establishing dollar liabilities, but they have exactly the opposite problem. They have all those dollar-denominated assets, and that's an entirely different problem, which is unique to China, historically unique. And I think they have to figure out a way to manage that problem in a way that they don't take too many losses. In fact, they are in the process of losing money on those dollar holdings, and that to me is a very interesting and different problem by historical standards.
Mm-hmm. We have another problem, another question that comes back to the trade relationship. Some would argue that the U.S. savings rate is low because of cheap imports. So it's more tempting for Americans to spend. Even in the Obama State of the Union address yesterday, it was hinted that the playing ground is not level. Do you think that makes sense?
Well, of course, if imports, the price of products are inexpensive, people will consume more. I think that's one factor, but I think there are broader factors related to savings rates, particularly at the, we always focus on the consumer level. As I said, actually, corporations are the biggest savers in both the U.S. and in the United States. But moving to the consumer level, I think there are broader factors, which cultural factors. I mean, we don't have to go through all the reasons why China saves so much. You know, the absence of the availability of credit, the riskiness of life, the demographics where China's population is such that savings is really at a maximum, given that the so-called dependency ratio in China is quite low. All of these factors are factors why China saves more. Put a negative sign in front of all of those and you have the United States. So all those factors are just the opposite in the U.S. and I think all of those contribute to the U.S. savings rate being so low. I think again, what's inevitable becomes necessary. So inevitably, both countries are going to move in the opposite direction. The U.S. will start saving more; it already has, and China will start saving less.
So I guess we're up to the last question. Do you think that the world in the future will move from one international currency to another, or do you see the future dominated by multiple international currencies?
Yeah, I think we're in a world, you know, unless something really dramatic happens, going forward, we'll have a world with the euro, the U.S. dollar, the RMB as major currencies, and then you know, those other currencies. Because in the end, when you think about a currency, what is it? It's a claim on fundamental underlying real assets. And by that I mean real assets, I mean plant, equipment, land, things that generate cash flow over time. That's what a currency is. It's some type of claim on those assets. And who has those assets? Well, the U.S. has, of course, a lot of those assets. And China is building up that asset base. The difficulty now with China is that it's hard to make any claim to those assets by holding its currency because it's still hard to invest in China and lay claim to the underlying assets. But in any case, when that does happen, when it becomes easier to lay claim to the underlying assets in China and their cash flows, then people will want to hold on to that currency. So inevitably, the big economies around the world, Euroland, United States, and China, will, and going forward, dominate the currency space as a medium of exchange, and those countries will benefit from having their currencies as vehicle currencies. Hello?
Hi, Russell. We're now at 10 a.m., so I think it's a good time to officially wrap it up. And with any follow-on questions, we can follow up after the webinar.
Okay. So thank you, everyone, for joining the discussion today. I'd also like to point out my own blog on Forbes.com if you're interested in keeping track with what Forbes is doing. And thank the sponsor and Ron for inviting us to participate in this today. So thank you, everyone.
Wonderful. Many thanks to Ron Schramm from Columbia Business School for that fantastic presentation, also for Russell for moderating and taking the questions and answers. Again, everyone, an email will be sent out after the presentation. It will receive a link to both the PowerPoint presentation that Ron gave, as well as the online presentation of this webinar, and you're feel free to access it and review it. You will also have an email to both Ron and Russell. If you'd like to follow up with any questions, I'm sure they would be happy to hear from you. So thank you, everyone, for joining us today. Please look out for our next webinar that will be sent out by email in regards to sustainability in the business school. Thank you, everyone, and the webinar has officially ended.